Typically, you've heard me say whenever you have a big movement like a gap up or a gap down, you just kind of avoid trading with it after that. And gaps down are harder to read next day activity than gaps up. And one of the exceptions to that rule, as far as a gap up is concerned, is identified in this particular example. I'm in AVEO, and this day on the vertical green line is June 22nd, 2017. And on this day, we had a significant gap up or the day after this, we had a significant gap up. And so we look at the conditions that we have. And well, first of all, let me go over here to the gap up day, and I'll show you what the power location, power 4 and Zion look like. In this particular example, Zion is above orange and going down, and the power 4 lines, the pink, blue, white, and yellow, are all going up. So you've got two types of divergence. You got directional divergence with Zion going down and the power 4 going up, and you have the power 4 under orange and power Zion above orange. So that's a double divergent condition. And again, it's critical that of course that you have everything else showing up with that. In this particular example, also in the trend chart, we have trend red has crossed over, and in this particular case, yesterday, the day before this green vertical line, trend red was under green. So in this particular case, which is somewhat, I don't want to say totally unusual, but this is the crossover day, and so on the crossover day, we then have the following day is our gap up, or the start of our gap up. And what I've indicated in the past on other videos is that we have these sky touches, we refer to them as in the trend chart, with red highest, but remember, what usually helps a sky touch a lot is when trend red is literally the highest line, as it is in this case. But it is also the crossover green line day for the gap up day. So when it crosses over, it happens to have gone up to be the highest indicator on the chart, and that's pretty much calling it as you see it. It's a sky touch, and it qualifies in the trend chart. And then there are other, without looking completely or identifying completely, counting them is what I'm trying to say. The identical indicators appear to be in a down, up, 2-day BOC pattern. That's what most of them appear to be in. There's zip green in a 1-day BOC pattern. But like the price charts the price lines are all in a down, up pattern, just like all the power 4 lines. So the identical indicator would be that 2-day BOC pattern in the form of a down, up movement. Now back to the process of identifying this movement that we see as far as the trading it after it gaps up. The exception rule in the form of gaps up is when on this particular day right here, this would be the first day it gapped up, zip green went to 100. And so when that happens, as long as zip green stays at 100, and this is the last day over here, so there's the gap day plus 3 more days after that where zip green stayed at 100. and there's a signal that you can obviously see on this particular thing, and that is, oops, I'm pulling this the wrong way, and that is right here, and that's on the trend chart. You can see trend red crossed under trend green, and that's the start of a downtrend. And so we've actually got some price divergence between trend red and the price chart. But again, we know that our trend trio is going up. The power green and orange are going up. Zion is going up in the swing chart, and if I pull these apart, I can see the red's going up significantly. Green seems pretty flat, but no, green is going up too. So you got all 7 lines going up in this particular example, and that's kind of what's driving the thing up. But the signal you recognize that'd be the last day you want to stay in it, and obviously it drops off a little after that. It's not significant, but again, this is a lower price stock than some might be trading in. This is only a $2 stock, but the rules are pretty much the same. They just have different values. So that's an exception to trading after big moves, and there's more of them on gaps up than there is on gaps down. So feel free once you get a feeling for how things are moving, but this is one clear example for anybody that wants to trade after a gap. If zip green hits 100 and you don't see the signal for going down, then you stay in the move, or stay in the position, I mean. So so much for that particular idea about trading. It's just a wonderful way to see the indicators work, and to give us signals, and to tell us how to stay in trades and how and when to leave a trade.